Hey everyone, welcome back to Trade Factory. In today's video, we are diving deep into the world of government securities or GSecs and their yields, how they are influenced by India's interest rates, global interest rates, and market factors. Let's start with the basics. What exactly is a GSec yield? Government securities or GSecs are bonds issued by the government of India to raise funds. When you invest in a GSec, you are essentially lending money to the government in exchange for regular interest payments, also called coupon payments. The yield on a GSec is the return you earn on your investment. If bond prices go up, the yield goes down. If bond prices go down, the yield goes up. This inverse relationship is important in understanding how interest rates affect GSecs. In India, the Reserve Bank of India, or RBI, controls interest rates through monetary policy. This directly impacts GSec yields in the following way. When RBI raises interest rates, which is a tight monetary policy, new bonds are issued with higher interest rates, or coupon rates. Older bonds with lower interest rates become less attractive. Investors start selling older bonds, causing bond prices to fall and yields to rise. When RBI lowers interest rates, which is an easy monetary policy, new bonds have lower interest rates. Older bonds with higher interest rates become more attractive. Investors buy these bonds, making bond prices rise and yields fall. Example, let's say you own a 10-year GSec that pays 6% interest. If the RBI increases rates and new bonds now pay 7% interest, your older 6% bond becomes less attractive. Investors will sell it, making the price drop and its yield rise. India doesn't operate in isolation. Global interest rates, especially US Federal Reserve policies, impact Indian GSecs. Here's how. If the US Federal Reserve raises interest rates, investors shift money from emerging markets like India to the US for safer returns. Foreign investors sell Indian bonds, causing bond prices to fall and yields to rise. If the US Federal Reserve cuts interest rates, emerging markets become attractive. Foreign investors buy Indian GSecs, making bond prices rise and yields fall. Example, if US bond yields go up to 5%, but Indian GSecs give 6%, the risk-adjusted return for foreign investors reduces, leading to capital outflows from India. If US yields drop to 3%, Indian bonds look attractive again, leading to capital inflows. Apart from the RBI and global rates, here are three more key factors that impact GSec yields. First, inflation. Higher inflation means higher yields because investors demand more return to beat inflation. On the flip side, lower inflation results in lower yields. Next, we have market sentiment and liquidity. During times of economic uncertainty, investors prefer safer assets like bonds, causing yields to drop. Conversely, when there's strong economic growth, investors shift to stocks and yields rise. Lastly, government borrowing and fiscal deficit. Higher government borrowing leads to more bonds being issued, which increases yields. When borrowing is lower, fewer bonds are available, and yields fall. Understanding GSec yields is crucial for all types of investors. For stock market investors, rising bond yields often mean higher borrowing costs for companies, which can lead to lower stock market returns. On the flip side, falling bond yields mean cheaper loans, which boosts corporate growth. So let's summarize everything we learned today. GSec yields move inversely to bond prices. The RBI's interest rate policy directly impacts yields. Global interest rates, especially US Fed decisions, influence foreign investment in GSecs. Inflation, market sentiment, and government borrowing also impact yields. GSec yields affect stocks, loans, and overall investments. Understanding these concepts will help you make better investment decisions and track market trends smartly. This video is for educational purposes only and does not constitute financial advice. Please consult a professional financial advisor before making any investment decisions. That's it for this video. If you found this information useful, don't forget to like this video, subscribe to our channel, and hit the bell icon for more updates on finance and investing. Question for you: how do you think the next RBI interest rate decision will impact GSec yields? Let me know in the comments below.